Hello all. Today we'll be discussing MV Solar, one of the players in the one of the most interesting industries, which is the renewables, right? So सभी जगह renewables का push चल रहा है, so why not track the renewable space? So I would say this is one of the best player post the big players like Wari and others. Yeah. So let's go into MV. So before going into MV, let's understand as to how the industry works, what are the value chain and what are the factors in the industry which like the value chain of the industry basically. Okay. So let's understand how are solar panels made, right? So first you'll have to discover what polysilicon. From polysilicon you'll have to make ingots. Ingots is basically the processed polysilicon. From ingots we make wafers. Wafers is the like the best discovery of the 100th century, from जिससे सब कुछ बनता है, from including chips to solar panels, everything is made from wafers. So the first three process or the first three parts of the value chain in making a solar panel India में नहीं है. So it is India में नहीं है is it is very less because obviously Chinese are very dominant in this, and we cannot compete with them in terms of pricing. Okay, now coming to the next value chain step, which is the cells. From wafers, cells are made. So when multiple cells are arranged together, we get a solar module. Solar module is what the solar panel basically. From after the after the module, you like module means with the glass panel with the side protective layer of steel and all that. So that is called a module. So finally, we get the solar here. In India, the majority of the players are in the last two steps, which is the cells and the modules. There are very few players in the wafer, but I would say there are none, or maybe I'm not sure. As per my knowledge, there is no listed player who deals with the polysilicon and the ingot making process. Okay. Now coming to where MV operates. MV, as almost all the other players, operates in the cells and the module space. So they buy wafers from China, they make the cells or they make the modules. Okay, clear. Now let's move into the what is the government doing here in this renewable. So you might be knowing that बहुत सारे schemes आते रहते हैं कि manufacturer or the PLI incentive schemes which come in. So until recent times, the government used to push only for the module making companies, because it was the easiest thing to do, right? Like just get cells from China, make the module and sell solar panels here. बट धीरे धीरे उनको समझ में आ गया कि भाई ये तो हम कर रहे हैं, वी आर मैन्युफैक्चरिंग, बट obviously this is not a value addition which we are doing. So let's get backward integrate, or let's push for more of domestically manufactured products, even the raw materials. So gradually they want to move from modules to cells to wafers to until the end process, until polysilicon hopefully. So now they have moved from PLI incentives to from modules to cells. So they are shifting the focus to cells. So they have come up with this thing called DCR, which is domestic content requirement. So for all these government schemes, which is PM Kusum scheme and all the rooftop solar schemes, it is mandatory that the solar panel is a DCR compliant solar panel. What is DCR compliant solar panel? The cell and the module both must be made in India. Then only it becomes a DCR module, and then it is eligible for the schemes. So gradually, so because MV makes both of these, they are eligible for these schemes, and yeah. Okay, now coming to a little bit of MV. As I said, they deal with both cells and solar, cells and modules, and they got listed in the main board in, I guess, November. They used almost all the proceedings to pay off a huge debt which they had. Yeah. Now let's move on. Let's understand the Q4 results which came out. Why is this company interesting to track? As seen in the numbers, revenue was at 5,000 crores, roughly 5,000 crores, growing at 116% year on year, and EBITDA grew at 140% year on year at 1,700 crores. PAT was at 1,080 crores, growing at 190%. Even PAT margins improved from 16 to 21%. So clearly, this is a worthy candidate to track. You can, I mean, obviously this is just an extract of screener, so if you want to get more details into the financials, you can go to screener. We are not here to talk about that. Okay, now coming to a little interesting data points. So MV has an module capacity of 10.3 gigawatts, and and a cell capacity of 2.9 gigawatts. So as I said, these are two different things and we'll have to track them separately. So solar cell capacity, because of the push of the government shifting from module to solar to cells, we can see that the capacity utilization has moved from 43% in FY25 to 70% in FY26. However, coming to the module side of things, the capacity utilization has gone down from 54 to 43%. Why? Two things. One is obviously this government push to cells. Second thing is they have इस साल में उन्होंने बहुत बड़ा capex किया है, ठीक है. So because of which the denominator in the capacity utilization formula will be a big number, and because of which the capacity utilization looks a little down. However, their shift is clearly to solar cells. I will tell you why. Yeah, let's look at this. So they are planning for a capacity expansion of 6 gigawatts in both cell and module capacity. So what? So and this target is given for by FY28. So they will be coming up with a capacity of almost 9 gigawatts for cells, and on about 16.3 gigawatts for modules. So what does this mean? The focus shifts from modules to cells, and they will have a backward integration process which will happen, right? So yeah. uh, yeah, and one more thing to discuss is, unlike Worry is getting into too many things, right? Too many things. So post the creation of the module in the value chain, there are multiple things which can happen. One is you can go and install the solar. You can make inverters. You can make batteries. You can make battery BESS, which is there, which is the battery storage solution. There are multiple things which can be made, right? But MV and there's also EPC contracts where you build solar projects, like you build solar power projects for utility companies and so on. But MV does not get into any of that, and I don't know, I personally feel it's a good thing, because this itself is a very big thing to do, and getting into all of that will require a lot of money. And maybe these guys, I mean, it's obviously a very big company, but yeah. uh, unlike Worry is getting into too many things same at the same time. I think because they are getting into glass manufacturing, they are getting into whatnot. They are getting into transformer manufacturing, inverter manufacturing, BESS. They're doing so many things at the same time. So it's just a little caution which plays out there. But in case of MV, they are only their focus is clear. They just want to manufacture cells and modules. And also they are coming up with a huge capex which will be commissioned by FY28. And also they are planning, they're still in the planning stage. They are planning to set up an ingot facility, and this will be I mean, just this is just words spoken by the management. There are no actions taken on this. This is a planned capacity expansion which can happen in the calendar year 28. Yeah, so that in MV2 we can be looking at a backward integration happening. Okay. Now for the cell and the module factories which will be opened, I mean, which will be commissioned for by FY28, where is the money coming from? Because you just repaid a lot of your loans. So they have got a loan from IREDA, which is the financing corporation for all the renewable projects in India. So they have got a loan for about 3,300 crores at an interest rate of 8%, and they expect this to be utilized, around 70 to 80% of this to be utilized for the plant, and the rest maybe they'll carry forward for FY27. And yeah. So and okay, we'll look at the updates in the con call. Okay, now let's go to the con call highlights. Few things the management is very confident about is the demand scenario. The management is very confident about it, with all the government push, with all the capex which is happening by a lot of players. It is clearly evident that demand is a zero concern here. Then coming to the technology upgrade here which is happening. So there are two types of modules which are sorry, cells which are manufactured, which is M10 and G12. So for the G12 cells are of higher efficiency than M10. I'm not sure about the specifics here, but G12 is a higher efficiency and it obviously will have higher prices. So currently the cells manufactured by Emmvee are in the M10 format. However, from May end, they will be shifting to the G12 format. There will be no production, pauses because of this. It's just a change in their line which they have to do. Their existing what plans are built to do this, but they are not doing it right now because they have a lot of M10 orders to be fulfilled. Post fulfilling of those orders, they will be shifting to the G12 format. So we can see better selling prices because of this. Now coming to the DCR versus non-DCR. So what is DCR? As I explained, it is domestic content requirement. So because the cells need to be manufactured in India in case of DCR, it obviously will have a higher price, because in the case of non-DCR you can just import cheap cells from China, make modules here and sell it at a lower price. So non-DCR it comes at a lower price per watt, and DCR comes at a higher price per watt. So DCR mix currently is at 20 to 22 30 to 35%, and it, as you can see, the price per watt is at 20 to 22 compared to non DCR at around 14 to 15 rupees. So yeah, so with improvement in the DCR mix, maybe we can expect higher realizations per watt. Okay, now coming to updates on the capex plan for the 6 gigawatt cell plus module factory. Land has been acquired in Bengaluru near the airport road, but this is just, and also orders have been placed for all the major equipments as per management. However, there is nothing, they have not given any conclusive evidence as to the commissioning of the plant. They tell that within this calendar year the module plant will be set up, and within FY27 the cell plant will be set up, and the whole thing will be completed within FY28 obviously. Okay, now coming to the exports. So one of the interesting question which was asked in the con call was regarding exports. Currently Emmvee has zero exports. Why is this a concern? Is US is a very big market for renewables post the US China conflict, all the tariffs being imposed. So ideally India becomes a second marketplace to look at for US. So this seems a little an interesting opportunity for Emmvee. Obviously the management didn't comment on they will be pursuing exports or not. Yeah, so this is one thing to track. So some of the other things which we need to track is margin profile. So the Q4 25-26 results of Wari were a little bad because the margins dipped from, I think, around 23% to 18%. So this we should not be looking at in case of Emmvee. Obviously they do not have exports, so they will not be affected because of the war situation. So ideally nahi hona chahiye, but this is a thing to track because of the the import dependency which we have for ingots. Okay, then we'll have to obviously track the capex progress which they are saying which will be commissioned within FY28, so we'll have to look at that. And one more thing is the capacity utilizations must go up for modules and cells in the upcoming quarters. Ideally modules should reach around 50-60% at least, because management said that even with the installed capacity at around 10.3 gigawatts, the actually usable capacity is it's around 70 to 80% of that, and for cells the actual utilization capacity will be around 85 to 90% of the installed capacity. So we'll have to look at the capacity utilization of this. Yeah, that's it for this video. Thanks for watching.